Dow is now officially lower for 2012. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Friday, the 1st of June. Yes, can you believe it? It's the 1st of June and this market's now lower for the year. Unbelievable markets. However, we talked about these markets before. We showed you the trade triangles. We showed you you'd be out or short these markets from basically the 17th. This is on the S&P 500. If we go to the Dow, you would have been out this market and you would have been short at, it's coming up, 1 second. Okay. So here's the Dow. You can see basically it's down dramatically for the day, trading at 12,170 and minus 100. So you would have had these markets. Look what we got out. This is on the 15th, 2 days before the S&P at 12,632. And that's like 500 points ago. So isn't this how the trade triangles work? Yes, it is. And it's how you can make money using our trade triangles. But first, what you may want to do, if you haven't done this already, did you call us for a one-on-one Market Club coaching yet? To find out if it's right for you? It's a free call and the consultation is free, and you can get set up right away. So give us a call today, 877-219-1482. We'd love to hear from you, and we'd love to be able to help you, because there's going to be some fantastic opportunities later this year and starting now. So let's go back to the charts and analyze the markets as we do. So the S&P 500, we're looking for this to go down to 1200. That's our next target zone, which is about another 174 points from here. That's the Dow, rather. And we're looking for the S&P 500, which we looked at just a few minutes. We're looking for that to go to 1200. So again, we still have some downside room on these markets. There's no reason to jump in and get excited about them. If you look on a weekly basis, we are closing right on the lows, unless there's some late rally we don't know about. But generally speaking, we're looking for this market to come on the defensive and be on the defensive for the next several weeks. So let's go back to the indexes, and you can see if we go, I'm going to scoop past the NASDAQ, it's the same there, and we're going to look at this is silver, this is a weekly silver. As you can see, the silver market has not enjoyed the same magnitude of the rally that we saw in gold. This market is basically flat, has been for the last 3 weeks. You can see this is a weekly chart, bum, very flat. And our trade triangles are basically minus 70, saying we're sort of moving out of a downward trend, moving into a sideways range, and we'll have a better view of this early next week. So let's go to our next market. Next market is going to be gold. Now, gold has had a big rally. However, it didn't move the monthly or the weekly trade triangles. And we want to look at this on a daily basis, and we'll just go boom. So there's the big day. We're up $70. I know it was $70 from the lows. The low today, we traded as low as 15.45, and we've traded as high as, looks like 16.18. So quite a number of, over $70, but it didn't change everything. It's probably put in some sort of a low here for the moment. You can see the formation. You've got a little bit of a low here, a little pivot point. So we may see, I would not be surprised to see further action in this market on the upside. So let me just clear the screen, and let me just go to a simple line chart, because a lot of people are asking about gold. And you can look at this market and say, okay, you've got a kind of like a base. We were expecting this market to go up. If you remember, we looked at our videos, we said we expected it to go up for the next 3 or 4 days. We did not predict it going up $70. However, we did expect it to go up to the 1580 level, which it did, and clearly went through that level. Now you have the sort of pivot point, which is right here, which is at 1600. And if we go, let's say, conservatively around the 1550 area, so I think 1650 would not be out of the question, somewhere around there before this market peters out. It still has not made what we consider to be the big turn. With our monthly and our weekly negative, there's no reason, in my opinion, to get super excited about gold. I understand the arguments, but the reality is the gold market's been going down pretty consistently for several months. In fact, 4 months in a row. It's the first time it's ever done that in a long time. So let's not get too excited. And I think if you look at this market on a longer term basis, and I'll just go clear the screen and put my cursor on, we go to a weekly or a monthly chart, you'll see what I mean. And I want that, and we'll go out a little bit. So there's the 4 months. I said 4 months in a row down. You have to go back a long, long, long way to find 4 months in a row down. But you can see around this 1500 level, it is beginning to build a new value level for gold. So around the 1500, very, very good support. We were oversold on the monthlies. So we're coming from that. I think if you're a long-term trader and you didn't mind taking somewhat of a risk if it went through 1500, you could perhaps look to buy it. But for my money, I'm waiting for the trade triangles because I know they work and I know I'll make money just waiting and being a little bit more patient on those. So let's go to our next market. Next market is the monthly copper. I'm going to go back to a daily chart there. Copper just made new lows for the year, which is not necessarily a good sign. But we are looking for this. Markets are very, very busy today. We're doing this live, and as you can see, it's taken a little bit of time for this to come up. And let's see if we can go to, let's just do a refresh. Yeah. So we're going to be looking at copper. So there we have the copper market. And it's minus 90, so we know the trend is still down. And here we have the copper making new lows for the move. We're looking for this market to go down to the 310 level, but as you can see, just based on the charts, it is not a pretty picture. And the last low we had was right around these levels, right around the 327 level, which is pretty much where we got today. We got down to 330, so we may see some support there, but generally speaking, we are still looking for this market to move lower, particularly with the contraction in the world markets. So let's go to our next market. And the next market we're looking at, you see it's better now. Crude oil making new lows. Looks, who would have thought this, but look what our signal came in at 97.05 on the monthly. On the weekly, of course, it's much higher than that. And I think you want to basically be looking at this market saying, hey, 80 is the next support level. So let's just scope this out a little further. And let's take some of these off so it's very simple. So 80, I think you're looking down these levels here as major support. I think this is, I don't see anybody coming out in the administration saying, oh, speculators are pushing the prices down, which they are. And that's how markets work. You cannot have jury-rigged markets like the government tries to do sometimes. Prices go up when demand is there, and they go down when supply is there. So that's how markets work around the world. So let's look at the euro dollar. The euro dollar basically new lows for this move. It's had a little bit of a bounce, which is, let me get closer in on this because you'll see it much better. But you see a little bit of a bounce today. It made a new low. Has it made a low? Yes, probably. But let's not get too excited because we still think there's a lot more downside for this market. You see every market, even if you had 1, 2, 3, 4, 5, 6, 7 days down, 1 day up. So eventually every market has to have a little bit of a bounce. We are oversold, yes, but generally speaking, things in Europe, look, Greece is going to leave the euro, period. That's they can kick the can, do whatever they want. They're going to leave it, get kicked out, go back to a drachma. They're going to have a lot of problems. Europe is going to have a lot of problems. It's not over with yet. It's death by 1,000 cuts, and we just had another cut today. So let's go into the Reuters-Jeffries CRP index, which is basically a indicator of inflation or the economy. So if we scope this out, you can see we've had a pretty big move down. This is I'm going to put a line chart on here. This is the area where I think it'll find support right around the 250 area. So even today's little bounce, or not bounce, but the fact that it stopped going down still hasn't changed the general trend in this market. So let's watch that very carefully. Now I'm going to go to a couple of other things here. Here's an ultra short, the SDS. We talked about this yesterday. You can see basically this market has made a turn. If we scope this in just the last 6 months, you can see it's made that turn, new highs today. This to me is a market that wants to go higher, and indicating the Dow, the ultra short, the S&P will go lower, this will go higher. So that's what we're looking for in this ETF. Very popular ETF, lots of volume, lots of liquidity, definitely worth looking at. And if you look at the euro, here's the EUO, which is the euro, the equivalent of being short, ultra short the euro. Now these are leveraged, but you can see the volume is very, very good on these markets. And that's sort of come back, still in a trend in favor of being long this market, which means short the euro. Now, one thing I wanted to share with you today in today's broadcast is basically this FAZ. Clicking on here, we had a signal today in this market, and I'll show you exactly where it came in. And if you've not noticed our new trade triangles and how powerful they are and how quickly they come in now, you really want to check it out. Here's the new improvement, and where did this come in today? Boom, right there. That's the monthly at 29.05. It's 29.27. I know it's not a lot, you're saying that, but this is the start of a move, in my opinion. And the monthly, which was short from a substantially higher level, scope this out. There's the monthly right there from 44.36. That's the first time we've had a signal in this market, and this signal was on October 27th of 2011. So you can see it's quite some time, but the signal kicked in, and I think we can see this market go higher. So lots of stuff going on, but if you're not using our smart trade triangles, I'll show you how to do it really quickly because we've got some really cool features. And that is, these are all the weekly trade triangles since yesterday, and you can scope over them, and you can see it tells you basically there's the green weekly, tells you 4.33, and that's on 5/31. So again, it shows you exactly when the signals come in, and if you can see 4.33, the market's trading at 5.15, it's making money. So these are how the trade triangles work, and you can sort for monthly, weekly, and daily, any volume you want to look at. Plus you can do equities, foreign exchange, futures, indexes, mutual funds, ETFs, penny stocks, Australian stocks, and Canadian stocks. Nobody has this kind of technology, and I know this for a fact. This is the most powerful technology, I believe, on the web, and when you learn how to use it, and we'll be doing some videos on this, you'll really, really enjoy and make more money with MarketClub. So anyway, lastly, I'll leave you this thought for the weekend. If you haven't called us yet, if you haven't had your one-on-one personal consultation, do so today. 877-219-1482. Love to hear from you. Have a great weekend. I'll be back on Monday, and we'll see how these things work out. Have a great weekend and a great trade.